Hi, this is Alessio. Hope you're well. Now, from the title of this video, I know you're probably thinking it sounds like clickbait, but I can assure you it's not. As you know, I don't post very often about the markets, but when I do, I'm quite serious about what I'm saying here. So as you may remember, in my last video about the stock markets, I warned that even though we've seen a very strong rally here in the major stock markets, nevertheless, there's strong warnings of a potential pullback or correction and a drop in the markets. In fact, I'm going to explain to you what this chart you're seeing here, what it potentially means about the stock markets and the strong warning signs that are forming here on the markets and what this potentially means for the stock markets in the next several months and what it potentially could mean also for Bitcoin. I'll mention Bitcoin briefly at the end of the video. All right, guys, so let's dig into the charts. Join me. All right, guys, welcome back. Now, as you can see the chart on the NASDAQ, which has been a nice uptrend from 2023 and also from the October lows, it has had a nice rally. And more recently, as you can see here, we just zoom in here on this chart, you can see that the month of May has been very good for the NASDAQ, but also the S&P as well. Now, it is interesting, though, that some of the leading indicators out there, like the Dow Transportation Index, as you know, Dow Transportation can be a very important leading indicator. You can see the Transportation Index is already taking out the lows, the support lows of May. This happened, by the way, yesterday. But relatively, the NASDAQ has stayed rather strong, especially since the rally we saw from April to May. Now, what is interesting, though, is this, that as the rally has continued, this has now shown up on the major stock markets. It's courtesy of Jason Gippert of Sentiment Trader. And this chart shows when two technical warning signs appear on the stock market, in this case, the NASDAQ. There are two important signs or triggers, which is the Hindenburg Omen and the Titanic syndrome. Now, before we talk about this major warning sign that's appeared on the markets in 2024, let's first of all explain what these signs, these triggers actually mean, these warning signs. So according to Jason Gippert of Sentiment Trader, the Hindenburg Omen we have here on the left signifies potential market weaknesses. When the signal triggers, it highlights a split market, which is unhealthy. Multiple signals in a cluster is a worrying sign. And by the way, for those of you who want to find out what the criteria is for the Hindenburg Omen, there's some details here for you right down here. I won't go into that, but I want to talk about this next signal is triggered, this next warning sign, just called the Titanic syndrome. This, Jason says, is a sign of market weakness, but is not as severe as the Hindenburg. A technical market condition when stocks have recently been at a high, and then there's a sudden jump in new 52-week lows versus highs on the NASDAQ. So essentially we have here two important warning signals that have triggered this year, just recently in 2024. Now let's have a look again at this chart, again courtesy of Sentiment Trader, and show what this could mean for the markets and what has happened in the past every time this signal is triggered. Now the reason why we're even talking about this chart is because it's the first time that these technical warning signs, the Hindenburg and the Titanic, have risen to such high levels since 2008, since July 2008, according to Jason Gippert of Sentiment Trader. Now, as you can see, the first time this signal triggered to such very high levels in the past 40 years was back in 1989. And you can see what happened to the stock market right back then. The NASDAQ, in fact, plummeted. You can see here back from 1990, there it was. Quite a major drop there we had on NASDAQ. Then back in 1999, which I'm sure you know, occurred right before the 2000 dot-com crash. As you can see, there's a major drop afterwards when the Hindenburg and the Titanic warning signals occurred and they triggered. Then there was back in 2007, right before the 2008 crash. So as you can see here from the blue line went quite steeply high right before the 2008 crash that occurred there. And of course, in more recent times, in the past 10, 15 years, well, there it is. In 2015, this signal went to 37, and you can see that occurred right before a major drop there in the NASDAQ and also in the stock markets in general. I think back then in 2015, most stock markets dropped by about 10%, at least. Then it occurred in 2019, as you can see here, this technical warning sign. And as I'm sure you know, this signal occurred right before the COVID crash, the COVID pandemic crash right there, before that major drop that occurred in the stock market. So as you can see, the most recent signal occurred just this past week. So as you can see, we're now at the highest level on this technical warning sign, the Hindenburg and the Titanic, not seen since July 2008. And that's where we're at right now. So what this means is that we're seeing strong signs of market weaknesses that everybody else cannot see. And that's why we pay attention to these signals when they occur. So in the past, whenever the Hindenburg Omen and Titanic syndrome have occurred, there have been strong warning signs of increasing risk, potential downside risk for the stock market. And it's something we do have to pay attention to. So going back to our chart here on the stock market, again, I don't think necessarily this means we're going to see a crash in the market. But as I explained in my previous video, I think it's probable that we might see some kind of a correction, some kind of a major drop, potentially to test prior levels. So for example, it is possible that the NASDAQ here could come down and maybe fill the gap here. We can see there's an open chart gap right about there near the 17,000 range, or potentially might even come back and maybe retest the lows of April, May. That is a possibility as well we have to consider. There is strong potential for downside risk here on the NASDAQ and of course the major stock markets here, for example, the S&P as well, given the fact that the two are correlated. So it does mean that given the data we just looked at here with the Hindenburg and the Titanic syndrome warning signs, that we should be on the lookout for potential downside risk in the next few weeks. Especially as we know, June happens to be also a seasonally weak month, a negative month for the markets too. So again, while the signals do not mean necessarily we're going to see a crash, however, we could see a strong correction pullback of some kind in the next few weeks. Personally, I think by the end of this year, we're probably going to see higher levels still. I think that it's more likely by the end of this year, by November, December, we still might see higher levels towards all-time highs. But in the short term, in the next several weeks, I think we should be on the lookout, very cautious of increasing downside risk. And what does it mean for Bitcoin? Well, I don't really know what it means for Bitcoin because even though there's a correlation between Bitcoin and the stock markets, the correlation is not exactly 100% or exact. But again, if the stock market were to drop, as we've seen from the major warning signs, then this potentially or possibly may put some downward pressure on Bitcoin and crypto in general. We shall see. It's not a certainty, it's not a guarantee, but there is that risk. So we should be also careful here and be very cautious of potentially increasing risk on Bitcoin as well. Again, it's not 100%, but there it is. All right, guys, what I have here on the charts, I'm going to go into more detail on the markets with Elliott counts in the next members video. So make sure you go ahead and watch that. And if you're not a member, you can join on the link you see right there. Thanks very much indeed. Bye for now.